So, as a fairly new person to Gamma Edge, I'm coming in. I see everyone talking about COTMP, COTMC. Now, I would never ask for the specific formula, but I'm just trying to understand kind of what it is and why I should be paying attention to this level that everyone talks about.
I think the short answer is um, understanding market sentiment and specifically fear and greed. Um, so, I mean, let's back up a little bit, right? Let's when I place. So we've already established for the new person coming in, they may not know this, but the majority of trades that are placed are out of the money trades.
Yep.
They're not in the money. I mean, we do get in the money trades. In fact, we had in the money trades or at the money trades, a lot of them on Friday, but that's not the norm, right? So what happens is I'm the speculator. I'm going to plant my 20s, my 10 deltas, whatever I'm going to buy, right?
Yep.
Whatever my exposure is. And we really saw this on Friday when we were tracking kind of what was going on in a few stocks. We were seeing the um, centroid, the strike centroid, actually in the middle of price. And then we also saw the strike centroid slightly above and slightly below price, right? But when it's below price, it's in the money. That's
Yeah.
monetization, right? So
Yeah.
why did that happen, especially on a Friday when, people risk assignment if they're in the money, whether it's on the short side or the long side. So the COTMP and the COTMC is to capture that. And the whole purpose of this is to say, I bought my 20 delta or my 5 delta or my 10 deltas, and now I'm up to 50 delta. And it's the balance point of where the market position is for that instrument, right? So it's literally the teeter totter of where the puts, COTMP, cumulative out of the money puts, it's where the balance of all of the out of the money puts now equals the balance of deltas for the in the money puts.
Yep.
So as price drops down, we roll deltas, we start collecting more deltas and basically negative deltas in this case, in the COTMP. And I want to get paid because now I'm starting to grab more and more and more of those deltas as price drops. So I went from a 10 delta or a 20 delta to a 50 delta, negative, of course, because we're talking about puts.
Mhm.
I'm going to take it off the table. And we see this over and over and over that when we get into this area, and it's a sponge, it's a wet sponge. It's not like to the penny, to the penny, to the penny, but it's literally the component of greed in speculation. I want to get paid. And a nice place to be is at the money because when I'm at the money, my strike and my price are aligned. And it's easy, right? I bought the 230 strike and we've gone from 250 down to 230.
Yeah.
At the money, take it off. And that balance point is that. Now, converse of that is true too. Right? COTMC, cumulative out of the money calls. The COTMC is just the opposite. It's where the out of the money calls that level above us now starts equaling the same deltas as the in the money calls. And so once I start moving prices up and I hit that level, I'm at the balance point for the structure. It's where people are wanting to get paid on the greed side to the north.
Yeah.
So it's really just a measure of where the speculation is and where we would see expectations of taking money off the table. And it's influenced by moneyness. It's purely influenced by moneyness. So, I don't know if that answers your question or if that helps, but it's it's how I like to think about it.
Yeah, no, I think that makes sense. Yeah, I think that's a good definition. I guess in terms of trading, they're fairly good upside and downside levels to be cognizant of intraday.
Yeah, yeah. I think I think the pre-market levels are the most powerful. for the day's structure. And then we start playing volume against COTMC and COTMP
Yeah.
throughout the day, right? And things move around. But yeah, I think certainly.
Or do you like using them more from from like a trading levels perspective of more, or more of like a sentiment perspective in terms of them like shifting up and down day over day type stuff? If that
Well,
makes
I
sense.
mean, yeah, it makes perfect sense. And when we see, so in the SPX analysis that we do every day, we make a note, did those levels rise or fall? And it's going to be tied to moneyness. As price expands, they're going to move up, right?
Yeah.
Generally, at least in the SPX. And as price comes down, they're going to move down. It's when they don't change is probably more telling, right?
Yeah.
When these things don't change and price hasn't changed, that means the market structure hasn't changed. The balance of where the puts and the calls in the structure is kind of that, in the net stat command, that top line, that delta, it's where you're in the money calls on the left hand plane and in the money puts on the right hand plane. You generally will see COTMC and COTMP remain fairly stationary in those conditions.
But like in an expansive bull market, we want to see that those levels shift higher, right? Because it's a
Just
representation of capital
just
being
like
committed to
expanding
higher.
gex. Yep, just like
Yeah.
expanding gex, just like expanding deltas. Yep,
Yeah.
yep. So yep.
That makes sense.
So we want to see gex ratio continuing to move up, right? That's always a good thing. Now gex ratio, of course, tied to moneyness, all this stuff. This is why moneyness matters, right?
Yeah.
So moneyness is a big deal in all of this, but you want to continue to see. You don't want the divergence, right? You don't want price to start going up and all of a sudden gex ratio pulling back.
Yeah.
Same thing with these COTMC, COTMP things. And delta balance, right? You want everything moving up as price moves up, and when you get that divergence, then all right, something's going on.
Yep. Does anyone else have questions over these two levels? I know a lot of new people always are intrigued by these, so hence the question.
Yeah.
Tom, I know you like to pay attention to these levels too, don't you?
Sorry,
Tom fell
which
asleep.
Oh man, zoned out. Now we were just talking about COTMP and COTMC, just giving kind of an overview of it. And I know you like to reference them at least, don't you?
Well, we look at it very closely every day, right? And what we find is puts and calls are not the same, but COTMP we see a lot of time it bounces. I think a check nav used to trade it, but it obviously doesn't work all the time. And but I just think of it as a more of a like a take profit. If you're not playing for that, I don't look at that as a target. P trans and N trans are more targets, right? So, but if you're holding, then COTMP is, you either play the bounce, is a high risk and reward trade, or if you are short already, the COTMP needs to be a take profit level because you never want to be the last one to get off the bus. You shouldn't. It's not about you want to capture the meat of the move, and by then the meat is gone. You don't want to be the last one left to carry the can. So that's.
Yep.
But we see it all the time. COTMC is very difficult to reach. It's a lot higher because there's just
It is.
so much speculation overhead. I mean, people just seem to be quite happy spending money buying OTM calls every day and hope for a jackpot. And they almost never get there. But even if it gets there, what I do find that with calls is a lot of time for whatever reason, because there's large money flows, delta flows, it will just blow it. I mean, it can blow right past. We've seen that before. Calls are not as playable as that. But COTMP, we almost see it. We see it every week, every day almost.
Yeah. And one thing on that, Paul and Tom, so like Yeah, playing the bounce to the downside, but does it give you information if we start to see kind of price just slice right through it, kind of expansion to the downside, say we get vol M expanding to the downside as well, which may be an indication of maybe, hey, people are piling in
Yes.
to additional puts as opposed to looking to monetize those puts.
Yeah, I think
Yeah.
that there's a lot of tools. We have a lot of tools, right? I mean, like Vol M, if you look at that, then you can see like a whole bunch of calls.
Slice right through it. Yeah.
Yeah, you definitely don't want to be holding on to that.
Yeah.
Yeah.
I think where CheckNav I see is not on, but I think when CheckNav plays this, and I think this is the right way to do it, when we come down to it early, like in the first part of the day, and it looks like we're going to stay within, a few points of it, within for the SPX, within, 2.5 points or so of whatever the level is. It gives you some confidence that sponge is, we're seeing that. But when we cut through that like a hot knife through butter, yeah, deltas are ruling the table. There's other things going on, and frankly, you most likely, if you cut through it, you've got opening deltas to the downside that are just pulling you down very, very quickly. And remember, COTMP, COTMC, those are all based on the morning numbers, right? And Tom's exactly right. This is where you need to switch your view over to really the real time measurement of volume and, Vol D, Vol M, and take a look at what's going on there, because that's going to tell you, that's going to inform you in the moment, where the COTMP, COTMC is still based on that static value. So there's a point there where if it doesn't hold, you have to flip to a different tool. Certainly.
Yeah. No, that makes sense.
Yeah, and none of the people in the industry, aside from the market makers, broker dealers, etc., nobody gets like real-time updates on position OI at a cost that is reasonable. So for us, it's we can't get intraday values that tell us what's going on at BOI level. So I mean, the use of volume, I think, is a great proxy. And so I would just urge people to pay attention to the volume if you do see the COTMP or COTMC levels being violated. I will say, just wrap this up, I've never seen the COTMC level that I remember. I actually tracked this. I'll have to go back and look. I don't think I've ever seen the COTMC level violated, but I have seen the COTMP level violated. It's generally when we are in a put-dominated market and we just have, something's going on, which is just, the avalanche coming down the mountainside type of thing.
Yep.
So for the new people, that's like everything else in trading, it works until it doesn't, right? So
yeah. Back to the mosaic approach though, right? Like that's just kind of one of the arrows in the quiver, I guess, so to speak.
absolutely.
So just be cognizant. And you would say that those pre-market levels are the best ones to monitor, and then the pre-market COTMC, COTMP levels.
Well, I think so. And here's an example of that, right? So we had that gap up of 70 some points midweek. And so the pre-market levels were way down at the bottom. So that, I mean, again, it goes back to the sentiment of the market. And so we had that gap up, and then all we did is just fall backwards all the way, literally to close the gap throughout the day. And then all of a sudden, the intraday COTMP levels were relevant to the morning levels. And that, remember, the morning levels are, I don't use the 0DTE. Others do use the 0DTE levels, like Terry and those folks. I use the all expiries, right? And so that, to me, from the morning picture, is the structure, right? And so everything else that we do, from an opening gap up and then the shift in moneyness, that's all spaghetti on the wall, and we really don't know what's going to stick. Sure, spot price has moved, moneyness has moved, but the structure is still the structure. Especially early in the morning when we haven't had a lot of sustained volume, so not a lot of spaghetti on the wall in that particular case. Yeah. Now, as you go through the day, if you've got really high volume that's occurred, consistently throughout the day, yeah, I mean, your morning numbers are going to be challenged. There's no question about it. But that's where I mean, you're right. That's that mosaic view. And, like Tom said, and I agree 100%, this is where you start shifting your viewpoint over to some of the real-time tools also. But structure doesn't change on a dime. That's the thing for everyone here to take away. It doesn't change the snap of a finger. It doesn't change because of the opening gap up. It doesn't. The structure is going to stay there because it's volumetric based, right? It's OI. And so because of that structure, it has to be manipulated. The sands have to shift, and that takes time of buying and selling and fear and greed and all that crap. So I think you're fine with the early morning numbers. I like Terry's approach, by the way. I wasn't saying that using the 0DT is not a bad thing. And he actually updates in the afternoon too. So as spot price moves, he just loads his trading view script with the afternoon numbers, the 12 o'clock or 1 o'clock numbers. Whatever works for you, right? Take the tool, make it work for you, and do what you do best. And I think that's the best